We have updates now for the longer, higher degree projections or the higher degree technical picture. All right, so it was perceived that the UK economy isn't really doing well and we shouldn't be having a stronger sterling. But it is now also perceived that the UK itself, politically, is getting to play a very consistent, strong role in remodeling Europe and in remodeling European defense, assuming the United States is going to withdraw gradually or suddenly out of its obligations towards joint or the pan European defense. I believe this is going to be having stronger implications for sterling, right, as an investment vehicle, and of course as a defense expense. We would use it, of course, for defense expenses, and therefore that's what we're getting. This is beginning to show now very strongly. If you have a very solid rise above a level 3, this is a weekly chart above the 200-point moving average. Usually there was always rejection around the 200-point moving average, 125 and 126. This market is now at 129. We are here 129.05. It's the upper boundary of a leading diagonal. It's also the upper boundary of what could be a diamond formation, but we believe we're going to support 129, at least attack the upper boundary of the leading diagonal and diamond formation before we reject. So this takes us to 134, 1.34. Midway, of course, is 1.31 and 1.32. So the current entry that we have, we can take to 132 on a weekly dollar, maybe even possibly 133. We'll have to check resistance levels on the hourly time frame, but the actual trade is between 1.29 and 1.34. It's a negative swap, meaning if we buy and hold, you will pay fees because the dollar is still the higher degree interest regarding the sterling, but very diminished. So the fees that are paid are not really much. There is another projection, but it would need different fundamentals. That projection is we're doing an EB and we can break out into a C. It takes us to the neckline altogether, 140, right? More likely, what we're really seeing is a wider ending diagonal. So we can see here 5 swings, so 1 and a 2, 3, 4, and a 5, A, probably B at that point, A, B, C into C. The yellow labels are correct, A again, B, A, B, C into C, right? Flat formation. We're going to get a rise to 134, and we're getting a broader ending diagonal, that's all. Just a broader ending diagonal. So 134 is the ultimate target, say by summer. Let's take it to actual trade management now. We're looking at the daily. We don't yet have good positive momentum on the daily, but I believe we are could be seeing a reversal trigger. It's not showing on the daily. I believe this is the one that shows on the 4 hours that I was talking about. Yes, sir, it is the one that shows on the 4 hours. This, of course, is a reversal trigger. We have a bounce out of 0 at the 200-point moving average, and the last time we were at that level, of course, the market was on positive momentum, but crashed, failed. So we take it higher to the daily, and we can immediately relate we're out of a level 3. This is the level 3 here. We're at the 200-point moving average. We're inside of a leading diagonal. This is the same A and B that we get to see on the weekly time frame. We can now understand how this is a flat formation. It's an A and a B, and an A, B, and the C, 5 swing C, right? This is the motive wave. This is what we're going to be segregating. The market will give you the impression that you should reject at the neckline and do the shoulder levels. But this is a tweezer. This is a tweezer. You will not do the shoulder levels. We've been watching it over the last week, attempting to buy lower levels, impossible. And therefore, we are suited to buy the market, have a stop below support 1 on the 15-minute time frame, and we are going to 134 within reach, of course, the whole market top. I don't think we're going to get it this week, no way. But, of course, we at least we'll get 130, 50, 131. I believe this is within resistance levels on the hourly time frames. Take it to more trade management. This is today's 4 hours. So the last time we were at 134, the market did 9 swings. This time it's probably doing 9 swings. We are seeing an extension. That's why it's a tweezer. That's why we cannot get a retraction. Look at level 9 here. So the last time again it was 9 swings. probably doing the same fractional. I'm going to segregate this rise. All right, it takes it to 2 hours. It shows a 1 and a 2. It shows a 3 at this point, of course, with an internal 1 and 2, 3, 4, 5, 6, 7, 8, and 9. 5 is at 09 is at 134. Takes it to 45 minutes. You would expect this neckline is broken. This is level 1, right? So we had a 1 and a 2, internal 1 and a 2, internal 3, internal 4, internal 1, 2, 3, 4, probably a 5. It's a 5, it's a 6, it's a 7, it's an 8, it's a 9. We're not going to the neckline. We're not even going to 1.2620. This projection here is showing just in case we have very poor industrial production numbers on Friday, just in case we have a very high CPI number out of the United States on Wednesday. Of course, fundamentals drive the market, so we have to relate to the fact that if we really break below 127.75, for example, you want to hedge all the way down to 126 consistently, 126.20. But the move is still gaining. Unlikely to break to the downside, gaining very strong traction higher to the upside. We take it to the last gross wave that we are seeing. This starts out of 4 into 5. That's what we're segregating on the 15 minutes. You get to 1 and 2, internal 1, 2, internal 3, 4, internal 5. There's a 3, there's a 4. Remember, it just continues 5, 6, 7, and 8. At some point, we're going to attempt around these and change the labels. There is a gross segment here, 1 and 2, 3, 4, and you can tell the market is now 129.20. Let's take it live by this formation. Inverted head and shoulders. We did this, I believe, on Friday, but the market didn't move higher. Have the hedge below origin of growth on the 30 minutes. That used to be the origin of growth on the 30 minutes. Let's take it live. All right, so we may get a correction. How do we know this? Because we have a bit of negative momentum on 30 minutes, and we were waiting to complete that 5, hoping it will break out higher in an extension. We get to see a 1 and a 2, something like a 3, 4, U4B4C, and 5. Now we're doing an A with negative momentum, a B, and a C. Maybe we still continue on an extension. Depends, of course, on the short-term structure or short-term momentum. I'm going to get the choppy, splattered momentum. All right, so we believe we are doing this fractional. We're doing it here. Last time I had the move, it took us to 161.8 from this growth segment. So I'm using the same projection out of the new growth segment. And 161.8 is 131.26. Let's 131.26. Let's insert the pivots. This is around resistance 2. 131.80 or 131.75 is also possible. All right, so the best entry is around that internal level 3. There is an internal level 1 here that we bounced out of, but you're better off at 128. 1.28 is resistance 1. Can we really get it? I doubt, but let's keep traction that if we take this to 15 minutes, for example, you want to focus on buying supports too on a daily basis. So the nearest today, it's 1.2837. 1.2840 is also perfect. 128 is really support 3. So we try to take an entry, 1.2840 using half size. And then if you see negative cycle extremes and a bounce at that level, we can add our remaining half size. There could be a break higher immediately. If we get to see that, we will be seeing a trigger of degree 3 positive momentum continuation on the 15 minutes. So assuming we get a trigger, we'll be seeing this again on the 15 or on the 30. On the 30 here, we used to have a trigger, but we got a retraction, negative momentum. Doesn't usually occur, it occurs only once. So assuming market breaks above overbought again, you're seeing degree 3 positive momentum on the 15 minutes and on the 30 minutes is really the best entry. We buy a market and then the hedge is just below the inverted head. So assuming we have a trigger, we're gonna be here probably. And protection is here. So by the time we get the trigger, we're probably going to be 129.40, 129.50. It's good entry. And we are going to have a hedge at 128.75. 75 points, and we are going to take it to 131.80. 131.80 is resistance 2. Right? At least this week. 131.80, 132.